All right, let's start. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alamin. Wassalatu wassalamu ala Rasulihil Kareem. Assalamu alaikum, everyone. Thank you again for joining us early on a Sunday morning. I know it's quite tough. Some of you travel from other side of the moon, Ilford and places like that. So it's really appreciated that you get up early and make the effort. What I'll do is I'll do a very quick, I know there's a couple of you who weren't here last week. Most of the weeks are fairly self-contained, so you could attend in theory a single week and hopefully understand the content, but it helps to have attended all 4 weeks. The last one was uploaded to YouTube, so you can find it on the Shah Jahan YouTube channel. So if you weren't here last week, please do watch that. But I'll do a very quick recap on what we talked about last time. The subject was broadly prophetic economics. So we asked the question, what is prophetic economics? So I'm going to ask you guys, what do you think prophetic economics is based on what we talked about last time? Anyone? Come on, I know it's early in the morning. You were here last week. Give me an idea. How did the Prophet ﷺ, what's the first form of Islamic finance that I mentioned last week?
Murabaha.
Correct. Well, almost. Try again. Mudaraba.
Oh, yeah, sorry.
Mudaraba. Yeah, I know that's what you meant.
Yeah.
So he was a mudarib. He was a manager of people's capital. So his first wife is the Rab al-Mal. He's the mudarib. She is the literally lord of the wealth, keeper of the wealth. She's the investor. She invests with him. And why? Because he's trustworthy. He's competent. He's good at what he does. And that's what we're lacking in the modern financial services industry and in modern Islamic banking, where there's not this partnership relationship between an investor and the investee. Instead, there's an asymmetric relationship where one is a borrower, one is a lender. So you've got this master-servant relationship in modern finance, and that's a relationship that carries on through to Islamic banking. So this concept of prophetic economics is where you have partnership in financial and commercial relationships. And if you remember last time I mentioned, Ghazali had said, it becomes easier for the financier to earn more money on the basis of interest without bothering himself to take pains in real economic activities. The interests of humanity cannot be safeguarded without real trade skills, industry, and construction. Remember, he's saying this about 800 years ago. Allah created dirhams and dinars so that they may be circulated between hands and act as a fair judge between different commodities and work as a medium to acquire other things. So in Islam, you can't create money from money, or you can't create money from nothing. The act of having money is not a valid basis on which to become richer in and of itself. So capital has to be deployed into socially useful activities. Actually, there's a guy called Lord Adair Turner who used to be the head of the UK's regulatory authority, which back then was called the Financial Services Authority. And he himself said that most banking was socially useless. He used those words, socially useless. And it is. So profits and losses should be shared in those real economic activities. Then we talked about what is riba. So come on, tell me, what is riba? How do we define it?
It's not trade.
It's not trade. Yep, that's the first thing.
It's access, basically.
Yep, it's a surplus or excess on money. So as I said last week, 1 penny increase on £1 million is still riba. And we have this idea amongst some finance bros that, oh, it's okay to have a little bit of interest because you've got inflation and you've got to match your inflation. It's not fair if the lender doesn't earn an interest rate that at least matches inflation. But that's like saying a small drop of alcohol, you dip your finger in a pint of beer and say, that's fine because I'm not going to get drunk doing that. Still haram, right? We're not going to do that. So why would we say 1 penny of interest is halal to us? So you're quite correct. Those are some non-technical definitions. There are some technical definitions, which is riba al-nasiya and riba al-fadl. But essentially, you need to know that one is the charging of interest on a loan, and the other is exchanging of commodities at different values. So this is, one sack of dates of one particular quality for another sack of dates of another particular quality, and you don't use a medium of exchange in between. Okay, so that's really a summary of last week's session. Riba leads to exploitation and injustice. And I use this illustration of the global north, the gilded global north, with its hands, the chains around the oppressed global south. We have this idea in establishment thinking. So whenever you see the news or read the papers, we talk about the IMF and the World Bank being this force for good that upholds the United Nations Sustainable Development Goals, the SDGs. These SDGs talk about, women's rights, healthcare, sanitation, literacy, all these good things. But actually, every time the IMF goes into a country to, quote unquote, bail it out, that country becomes poorer. And its debt burden to the global north becomes bigger and bigger. And there are many structural reasons why this takes place. And they're complicated. It's a big story. It will need a little bit of a deep dive to understand it. I hope that by the end of the 4th week, you'll have a better understanding of why I think organizations like the IMF and World Bank are not a force for good. And I actually think that the IMF is an agent of shaitan. That's how I view it. I see that it's an organization whose stated objectives seem very noble, but the actual empirical evidence suggests otherwise. It ends up enslaving the global south. Okay, so last week I intended to talk about this slide, Islamic banking, and we did actually touch on it. I mean, there were many things that we said. As you can see, I'm not a fan of Islamic banking. I used to be a champion of them. I used to say that we should all use them. I still do have some products within Islamic Bank. And I should be careful that try to be a little bit nuanced in my public views on Islamic banks. Sometimes people, when I say these views, people then come up to me and they said, oh, I'm so glad I heard you say that, because I was going to take an Islamic mortgage to finance my house, and I didn't do it because I knew that it was haram. And I think to myself, oh, that's really distressing to me, because I don't want to cause a harm on people. And there is also the doctrine of necessity in Islam, where if you need to put a roof over your head, scholars have in the past given certain waivers. So before there are Islamic banks, before there is Islamic mortgages, scholars would allow the people to take conventional loans to finance their home. They granted a waiver for that because they didn't want to cause a harm on the people. So for essential things that they need. And it's disturbing to me when people say, I was going to take a mortgage to buy a house, but now I decided after listening to you that I won't. That's not my intention. If there is no alternative, then it's better to take an Islamic bank mortgage than a conventional bank mortgage. That's my view. Anyway, what do I think about Islamic Bank in this country? Well, 2005 was the establishment of the Islamic Bank in Britain. It's now called Al Rayyan Bank. You've really only got one major retail bank here. You've got Gatehouse Bank as well. And there are one or two others. Some of the Arab banks have established branches here, and they've got Islamic divisions within them. But here's the key metric, just underneath the picture of the dinosaurs being hit by the meteorite. British Islamic banks have made a cumulative profit of only £31 million, it's not a big number, over 20 years. That represents 39 pence per person per year, per customer. That's a terrible, and by the way, up to 15 years, it was a cumulative loss of £200 million. Now bear in mind, this is a monopoly position they have. There are hardly any other Islamic banks in this country. And yet, it's a massively loss-making enterprise. Why? Because we, the community, intuitively know when there's something wrong. We may not be finance experts, and I don't expect people in this room to be. I mean, we come from all different walks of life here. And actually, one of my slides is to talk about what are basic financial instruments. So if you are a venture capitalist, which I know one of you is, you'll probably get bored by that slide. But what I'm saying is that this is a monopoly position. These guys only have us to sell to, and we're not buying it. We're voting with our feet. We're going somewhere else. Most of my family and friends, probably 95% of my social circle, are practicing Muslims. almost none of them have got an Islamic bank account. Almost none of them, actually none of them actually, have got an Islamic mortgage with one of these banks. Why is that? Because despite being, professionals in other areas, non-finance people, they intuitively know that Islamic banks are not serving them, and there's something not right about it. It looks and feels, remember the duck analogy that I used last week? If it walks like a duck and if it quacks like a duck, it is a duck. That's what they feel about Islamic banking. It looks like a conventional bank to them. Why is this? Well, I have my theories. The industry will disagree with me. This is why I don't do this slide in industry conferences. I get into a lot of trouble for it. In the UK, the management of these banks lack cultural affinity with us. They lack technical expertise because they come from retail banking, conventional retail banking backgrounds. So they don't know what a mudaraba is. They don't know. They really have no understanding of the technicalities, and they rely on their Sharia coordination departments, usually Indo-Pakistanis with a background in fiqh, who coordinate with the scholars. They never speak to the scholars directly. They don't really understand what it is the scholars do on a detailed level. They are general managers leading managers, not experts leading experts. So there was a famous study by the Harvard Business Review, and I think it was a study of Apple as a company, and how Steve Jobs created a company that was experts leading experts. If you want to create a great company, be an expert in something. Remember last week I was talking about ihsan and how we as a community don't seem to have that whatever our profession is, whether we are a plumber or a nurse or a doctor or an engineer, somehow our people don't have this inherent desire to have excellence in everything that they do. And I use the analogy of the guy double parking on Jummah, spoiling his own prayer. This is a problem that we have. If you want to create a great company, be the best that you can be in your chosen field, whatever it is. Because then you are an expert and you can lead expert. Everyone can be taught to manage. That's not the hard bit. But these banks are general managers leading managers. And that doesn't create a great company. So the result is you have organizations with, in my opinion, low quality, high cost, low performance, ludicrous legal costs, very risk-averse credit processes to approve people, and just laughable delays in doing anything. That's why I believe it's been a failure. Right. Yeah, let's talk about some specifics on products. Has anyone used an Islamic bank or any form of Islamic mortgage to finance their home? No? Okay. Any reasons why you might have looked at it and decided that you wouldn't use it? I presume some of us have mortgages with...
I've looked at it and I've compared it against traditional.
Yeah.
They were very expensive.
Yeah.
Maybe because they just don't have enough resources or
Yeah.
just aren't competitive.
So very expensive, uncompetitive, maybe they don't have the resources. Did you look at the banks or did you look at the fintechs, the smaller, early, the new companies that have come through?
I think from memory, it was the main
Al-Rayan and Gatehouse and people like that. Yeah. Okay. Al-Rayan don't even offer an Islamic mortgage anymore. They decided, which by the way I think is a betrayal of the community, because they were set up in 2005 to serve our communities. Whether it was concentrated populations of Muslims in East London or in Birmingham or in Bradford or in Manchester, that's what they were set up to serve. And now they essentially serve their Gulf clients who come over in the summer and drive Lamborghinis around Harrods. That's their core customer base now in the UK, which is, I think, it's a betrayal of what they were set up to do. So they don't actually offer those products anymore. Every member of my family used to have a current account and probably also a term deposit with Al Rayan Bank. And then they introduced a new rule that said if your account is below a certain value, you have to pay a monthly fee. I mean, that's just silly. These are monopolies who have a license to print money. Why would they charge me for this? And so we, one by one, started closing our accounts. I still have a few products remaining open at the moment. But, this is not a great business model. And the reason why they were set up was to serve us and to help us finance our homes and hopefully other things like car finance, maybe small business finance, which is never going to happen through the banks, by the way, and we'll talk about that later. So really, how do we finance our homes? The banking model, conventional banks, as you know, last week I talked about this concept of fractional reserve banking. Anyone want to take a stab at defining what that might mean? Fractional reserve banking? Yeah.
Where the bank takes your deposit that you leave there and then takes a fraction and lends that back out to...
Right. So almost correct, because they don't actually do anything with that. It just sits there. So the money that you deposit, £100, you put it in your bank account, it actually just acts as a reserve and sits there. What they lend out is not lent out from what you put in as a reserve. And actually it's created at the stroke of a key. So it's numbers in a computer, which is weird because when people, and I'm going to talk about Bitcoin next week, when people talk about Bitcoin and one of the criticisms is it's not real, it's intangible, it doesn't exist, it's only electronic. That's exactly what the numbers in your bank account are. They're digital numbers in a computer somewhere. And actually it's even worse because it's been created, that money has been created ex nihilo, from nothing. So this fractional reserve, the £100 that you deposit, if they lend out £1,000, 900 came from nothing. 900 was created from nothing. No work was done to make that happen. It's just numbers in a computer. So the model of banking is to create money and lend at interest. So let me rephrase that. 97% of all money circulating in the economy was created through the act of lending by private sector banks, not even a central bank, by private sector banks, Lloyds and Barclays and HSBC. That's not real. That money is not real. Fiat money, fiat means by decree. So fiat money is any money a government says this is money, whether that's a euro or the dollar or the pound or the yen. All the money that we see in the world is fiat money. It's been decreed by the government to be used as money. And the beauty of fiat money, it's magic money. It's created from nothing. And if that's not a form of riba, I don't know what is. So all money in the world today is essentially riba-based money. It's born in the act of lending, which is why banking as an industry is morally fraudulent. If a Martian landed on the earth today and looked at what banks do, that Martian would conclude that banking as an industry is a type of fraud. Because you deposit some money, you lend more than you actually have. Surely that's a type of fraud. What do Islamic banks do that is different? Well, they also create money because they're regulated by central banks. So the central banks say, okay, we agree that you're a bank, here's your sign-off, and we allow you to create money through the act of lending. And the Islamic banks say, that's great, now I've got a license to print money, but I must use Shariah-compliant contracts. So then you hear terms like murabaha, mudaraba, wakala, istisna, salam. Doesn't matter what those mean. What they do is they create halal contracts. Their scholars sign off on those halal contracts. And they say, we can use these to effect the same products that conventional banks give to people. So whether it's mortgages or something else. So you are, in fact, there is something different. I'm not saying there's nothing different, but fundamentally the basis on which you are financing an asset is really not very different from the way that conventional banks do it. And the way that they do it is better than conventional banks. So for example, you want to finance a house, they will buy the house and take legal title to it. And you'll contribute your 10% or whatever it is, and they'll contribute their 90%. And now you are partners in a relationship called a musharaka, right? A partnership arrangement. So you own 10% as the quote unquote borrower, they own 90%, and you will pay them a rent on the house for the 90% that they own. That's your monthly payment. It's a bit like the interest payment. I'm not saying it is the interest payment, by the way. Legally, it is a rent because they have title to the house and you're paying them for usage of the house. And then in addition to that, every month, you'll pay them a capital repayment, a small amount, so that over 20 years, or whatever is the maturity of your loan, you will repurchase the units in that house, the musharaka, units in the musharaka. So in theory, that sounds nice. You've now got it's called a diminishing musharaka relationship. Over time, their 90% will reduce and your 10% will increase until by end of year 20, you own 100%. That all sounds very nice. So I like that. That's good. That's a real asset arrangement. The problem is, of course, that they're still a fractional reserve bank and they're in the business of money creation ex nihilo, from nothing. So the fundamental business model is not hugely different. Now, again, I'm going to say this one more time because I really get upset when people come to me and say, oh, I was going to take a mortgage to buy a house, but now I'm not going to do it. So again, I want to emphasize that if that is the only product that is available to you, you have the doctrine of necessity. You're allowed to put a roof over your head, and the scholars will grant you that waiver. Even the most conservative scholars will say if you have no alternative, then that's what you should take. So I'm not trying to prevent people from going to the Islamic banks and taking it. I've done it myself, right? I don't want to be a hypocrite about this. I've done it myself because there wasn't an alternative available. However, there is now a third alternative available. The new fintechs. Does everybody know what I mean when I say the word fintech? Financial technology. It's just a word smushed together. So you've got a lot of early stage companies who have arrived on the scene within the last few years. You've probably seen in TikTok videos and Instagram videos names like Wahid, IFG, Islamic Finance Guru, have you heard of them? Curate Capital. And these new fintechs have arrived on the scene and they're offering new products. It's a very exciting new era for Islamic finance. They're offering investment products and some of them are offering Islamic mortgages. So now you've got a third option to finance your home. Now, here's a bit where it gets a little bit tricky because some of them are bank-like financial intermediaries. Bank-like. I'm not saying they're banks because to be a bank, you have to be regulated to be a bank. And some of them are non-bank financial intermediaries, or more specifically, they're offering a non-debt product. And it's really important that I emphasize non-debt. And let me explain what I mean by that. And the one company that I champion in this space is called FIDA, P-F-I-D-A. Now, brother here was saying that he looked at it and it was very expensive. Yeah, it is expensive, and there's lots of reasons for that. One of them is because a small company has a higher, what's called a risk profile. Other companies, other people who finance those companies think that these smaller companies are more risky because they're smaller and they're more exposed to market forces. If you're a big bank with lots of resources and a strong credit, then people think that you are a low risk. So your cost of financing your operations is going to be lower and you can pass on those lower costs to your customers. So I have to be careful that I don't suggest that they are trying to gouge the customer by charging them higher fees because they can get away with it. The reality is the rest of the market deems them to be more risky, so their costs are higher. And that has to be passed on to the customer. So that's not their fault. Actually, that's our fault in some ways because we're not going to them, right? We're not prepared to be first adopters. And so they're not growing. FIDA, as I say, I think is a brilliant company managed by some very sincere and capable and qualified people. A couple of brothers who really know what they're doing. And by the way, the Islamic fintech space is a minefield. And I really would like you to be careful because there's some very early stage companies who are purporting to offer amazing products, but do not have the skills and experience. If I want someone to manage my money, frankly, I'm looking for gray hairs. You know, I'm looking for somebody who's been through a few business cycles and has done this for a few decades and really intimately understands how financial markets work at the coalface, sitting in the industry, doing it for themselves, not adjacent to it, not having studied it from a consulting firm or something. No, actually building products in the market, selling them to customers for many, many years before they go away and set up their own fintech. So that's why I'm a bit cautious about this new wave of Islamic fintechs. I support them. I'm very happy that they're there. I believe that we should patronize them, we should give them, but I'm very, very wary of giving them my money to manage because I just don't think the experience is there yet. However, with FIDA, I really, really am hopeful for those guys. Inshallah, I hope they're successful because those guys, they have come from a financial services background. They have worked at the coalface of designing Islamic financial products in other organizations before they started this business. And FIDA is a truly non-debt home financing company. And what they do is they pool investors. They bring in investors and say, you are the pool of funds who will buy these houses, and then we will lease these houses back to the customers. And you might think, well, how is that different from the second one, Islamic banks? Because they buy the house, they take title to it, and then they rent it back to you. But notice when they rent it back to you, the rent is priced at a number that says X%, which, by the way, is benchmarked to what the conventional banks are charging. So there's this interest rate called LIBOR, you might have heard of it, or the base rate of the Bank of England, and they say base rate plus X%, base rate plus 2%, or whatever the number is. And you end up paying 6 or whatever percent it is. It's weird to me that you would say, I'm going to charge you a rent on this property that I own, that you want to live in. And the rent I'm going to charge you is basically the interest rate plus a bit that the conventional banks are charging you. It's not actually a market rate, a rental rate for sitting in that house, in that area, and that size of house. It doesn't make any sense to me. So that's why I feel very uncomfortable with the Islamic banks, not just because they're creating money ex nihilo from nothing as their basic business model, but also because what they charge you is, and they'll say, and it's a fair argument, they'll say, well, if we didn't benchmark it against the conventional banks and nobody would use our services, if it was too cheap, we'd lose money. If it was too expensive, if we weren't charging enough, we'd lose money. If we're charging too much, then we'd be gouging customers. So we have to benchmark it against what the conventional banks are charging us. FIDA do it differently. They say this pool of investors who are buying these houses, we're actually going to charge the people who want to own these houses the rental rate of these properties. And then they can repurchase it over time, their capital repayments. Remember, I was saying to you with the Islamic banks, you pay this rental portion under the diminishing musharaka, and then you pay this capital repayment portion. So in the end, your cash flow every month is basically similar to what a conventional bank is charging you. FIDA say this is a non-debt product. You're not borrowing from us. You are taking money from a pool of investors. They are buying this asset, and then you're paying a rent to them. And then over time, you can buy units in that pool. So that's quite a different relationship. And also, very importantly, FIDA are not a fractional reserve institution. So there's a one-to-one correlation between that pool of funds and the houses that they're buying. Whereas with a bank, it's a 1 to 10, 1 to 20 correlation, this creation of money from nothing. You put £100 in there and they're lending £1,000. In the case of FIDA, you're putting in £100, they are buying £100 worth of assets. Please.
With regards to the Islamic bank question, because I saw the word bank and it says create money, Islamic banks create money. So with the Islamic banks also from a fractional basis?
Yeah.
So I think historically the comments were of funding, it's very expensive to borrow, we don't have enough money, and I know when FIDA, first set up, the challenge there was exactly as you said, it's pooled by people contributing savings, and so you got onto a waiting list. And I think that's a brother the earlier question. I guess the difficulty is there's just not enough money. So the Zam banks were fractional then.
Yeah, 100%. They are, because they're banks, they're regulated to be banks. Remember this, when this gets published, I'm going to be in all sorts of trouble. When the banks are regulated to be banks by the authority, in this case it's the PRA, the Prudential Regulatory Authority, the government or the central bank is effectively saying, I'm allowing you to create money from nothing. That's your job, is money creation. Again, it's the Martian analogy. They land on planet Earth and they say, oh, this is a fraud, what's going on here? That's what a bank does, whether it's a conventional, whether it's Islamic. When the central authority says you are a bank, you have the right to create money from nothing. Please.
why do the Islamic banks still have a high risk rating if they're like big institutions?
Why don't they or do
Why
they?
do they?
Why do they? Because they're smaller. They're small organizations. And by the way, they think small. They really do. I mean, you're hiring a conventional retail banker. You're not hiring them for you're not hiring Steve Jobs here, who's thinking, Steve Jobs didn't create the iPhone with customer focus groups. He didn't gather people, in little groups and say, what kind of product would you like? If Henry Ford had asked customers, what kind of product would you like? They'd just say, faster horse, better horse. He decided that I'm going to create something better than that. So, visionaries create products that people don't even realize they need. And now every one of us has got a smartphone in our pocket. Please.
Sorry, I'm just trying to wrap my head around FIDA. So you said there's a pool of investors and they buy the properties and you're paying them back. So I'm just trying to understand how it's not a debt to the investors. And then my second question is, in terms of riba, you said it's like a surplus, right?
Yeah.
So if, they assess you and see that you are more of a risk, aren't they charging you a surplus for that risk that you might bring to them?
Yeah, okay, that's a great question. So the reason why the FIDA product is not debt is because it's more like equity. So I will try and explain these terms, and it's really important that I know people here are not finance people. So when I use a term and you don't understand it, please, the whole point is that you ask me. What they are doing is they are pooling funds, a little bit like this mudaraba relationship between the manager of the capital, the mudarib, and the rab al-mal, the investor. So when you have a relationship between the investor and the investee, you basically got a partnership. We're in this together. We're going to share in profits and losses. So for example, if you sold the house, you'd have to share a little bit of your upside with the investors. You don't do that with a bank. With a bank, you say, I'm going to borrow 100, I'm going to pay you 110 back, or whatever the number is, right? There's no real risk sharing in the middle there. They'll tell you there is, but there's not a lot. So you're saying capital comes back and interest comes back. And the reason why the FIDA relationship is not debt, it's not this asymmetric relationship where master servant, lender borrower, that's the relationship that banks have with people. The reason why it isn't is because both sides can make a loss here, potentially. Obviously, mostly the housing market tends to go up, so it's very rare that that actually happens. But in theory, we're putting capital at risk, and that's the beauty of many Islamic finance structures, is that when the two parties involved in this arrangement are investing in something together, not one saying, I don't really care what happens in between the asset, I don't really care. I want the shirt off your back if you fail to repay. That's the difference in the relationship. So FIDA are taking a risk and their investors are taking a risk. It's not debt, it's equity.
Oh, so is it equity 50%?
I don't know what the numbers are, but I would imagine that typically they would take a deposit. Forgive me if anyone's watching this from FIDA if I get the numbers wrong. Let's say the deposit was 25% or whatever. And then the customer's putting in 25% of the value of the house, the pool of investors are putting in 75%, so they own 75% of the house, and the customer owns 25%, and then they repurchase over time. Yeah.
Sorry, quick question. I know you're not a spokesman for FIDA, but
I sort of am, actually, because it's the only one I really believe in.
The person purchasing the home with FIDA does renovation to the home and
Yeah.
increases the value of
I don't know the answer. I don't know the answer. You'd have to ask them.
Yeah.
But I have to say, every time I've looked into I don't work for them. They're close colleagues of mine in the industry. We collaborate together and so on. You would have to ask them directly.
But
Yeah.
you said there were a bit different to say Wahid and Curate Capital.
Neither of them are home finance providers.
Okay.
Yeah. Those are investment platforms. Yeah. Please.
Al Rayyan's got huge financial clout. Why don't they do things differently? It's owned by Qatar now, isn't it?
Yeah.
But they're restricting access for the average Muslim. It's going to high net worth only now.
So I was.
You become like.
I was using this example of, they used to be for our communities, and the whole point was they were set up and they were granted regulatory approval because the business model was serving us, helping us to finance our homes. There's a famous story of the governor of the Bank of England, Eddie George, lived next to a Bengali family, and he came to discover, he found out that his Bengali neighbor couldn't finance their own home because they wouldn't take interest, or they wouldn't pay interest on a mortgage. And he said, well, this is a problem. I need to do something about this. And that was the genesis of Islamic banks in the UK, because the governor of the Bank of England, by chance, happened to live next door to somebody who couldn't finance their home in a conventional way. And he says, I need to fix this, because financial services need to be inclusive, right? We have to ensure that everybody in this country is able to service their basic needs, regardless of their faith. And that's why we ended up having a bank set up, Islamic Bank of Britain, which served our community. And then, as you say, they started closing down, or effectively closing down, current accounts and mortgages, because that wasn't the model that they thought was lucrative, presumably. They thought the lucrative model was to allow high net worth individuals from the Gulf to come over here and have their bank accounts in a branch in this country so that they can finance whatever they do at Harrods and whatever. That's not a community bank. That's not for the people. And frankly, that's socially useless. Going back to Lord Adair Turner and his comments about the banking industry. There was another question. Sorry, did I answer that question properly?
I said, why don't they? There could be a program
why don't
to
they?
show them.
Yeah, why don't they?
They're not. They're
Okay, so I'm now going to talk about, oh man, I'm going to get into so much trouble. I probably, yeah. I need a moment to think, how can I tone this down? Because off camera I can say other things, and I will say other things. Asda, you all know Asda, right? Was bought by some Muslim brothers some years ago. I mentioned this last week, I think. Did I mention Asda last week? Yeah, I did, yeah. They had an opportunity to do a £6 billion financing using a true risk-sharing structure. You don't have to call it Islamic. I use a pen or a phone or whatever. It's not an Islamic pen or an Islamic phone. It's just a tool that I used. They could have used a type of financing as a tool that was compatible with our values, with our faith. It could have been risk sharing in some way. Maybe it would have been profit sharing or revenue sharing or something like that. Maybe it would have taken a risk in the underlying asset, which is Asda. But they didn't. They went to Barclays and they financed it with a big leveraged finance loan with interest, riba. Again, I'm just thinking about my words here, and I can say other things off camera. They had the financial clout to do that. They could have dictated to Barclays Bank and said, no, I want you to do it this way. But they didn't do that. And most people don't, because they're looking for the path of least resistance. So that's why, I don't know if you guys remember, I talked about contractum trineus last week, this legal device, this legal ruse that financiers used in the Middle Ages to circumvent the church's ban on usury. So they created 3 contracts in one, and it was called contractum trineus. And individually, the church looked at these contracts and said, that's compliant, that's compliant, that's compliant, that's fine, off you go. But when you put them together, it created a loan with interest, and the church overlooked it. And eventually, riba has become normalized in Christian-based societies. I hope that we never get there, but we have our own contractum trineus, which is the commodity murabaha, which was this contractual structure that I very briefly described last week. So this structure is the path of least resistance, because it's the duck analogy. It quacks like a duck. So when you're in an investment bank or any large bank and you say, okay, we need to finance these deals or finance these homes or finance these assets on a Sharia-compliant basis, and then somebody with a little bit of knowledge says, hey, I heard of this thing called commodity murabaha. 90% of the bank's financings around the world, Islamic bank finances, is done on this basis. That's my number, by the way. Somebody will complain and say, that's not true, brother. That's not how it works. Remember that I'm an insider, by the way. I've done this for 30 years as an insider, and I'm not adjacent to the industry. I'm in the industry. I'm building the products and selling them to customers. So when people argue with me and say, that's not true, brother. I've done a degree in with apologies to people who've done degrees in economics. I've done a degree in economics and I know better than you. I said, well, you haven't worked in this industry for 30 years. So I know, sitting at that desk on the trading floor, exactly how these products are put together and sold to customers. I'm going to come back to you in 1 second. So this commodity murabaha, when you tell people I'm going to do an Islamic deal or I'm going to finance something Islamically, they say, okay, let's choose this one because that's the easiest one to get across the line. Our legal department will agree, our credit traders will agree, our compliance department will agree. Because what they see is, it looks like a loan to me. Fine, no problem, tick the box. So everybody does it, not realizing that that's the worst structure possible. And again, people in the industry, in Islamic banks, and those adjacent to it will say, brother, you're talking nonsense. It's perfectly halal. The scholars have signed off on it. I think the scholars are causing us great harm by doing this. Yes, please.
How does the banking system work in Saudi Arabia and other countries that have...
You're really going to get me into trouble now. Yeah.
I'm just curious.
I have to travel there.
We're talking about the UK, but what about countries that are based on a Sharia legal system?
Yeah.
How does the banking system work there?
Oh my goodness, I have to be so careful. You'll notice that in Saudi, at least up until recently, I don't know if it's the case now, they don't use the word so-and-so Islamic bank. They just say so-and-so bank. They never made it explicit to people that this bank is not Islamic and this bank is Islamic. They just use the word bank. Because if they were to reveal that some banks are called something Islamic bank and some banks are called just bank, that people would say, wait a minute, so this one's haram and this one's halal? Why are we always using this one? They didn't want to make that explicit.
They've got a dual banking system, even in Saudi Arabia, which is a Sharia...
Yes, so you've got conventional banking and you have banking that purports to be Islamic. So it's based on these contractual structures. So they're all fractional reserve banks. They all do money creation. That's how any bank operates in the world. If you have those 4 letters, B-A-N-K, you are regulated, you are authorized by the government of your country, by the central bank of your country to print money from nothing. You take in reserves, those reserves sit there, you do nothing with them, and you lend more than you have in reserves. You've created money from nothing. So all banks do that. Now, you can be Islamic and you can be conventional, but ultimately that's the model that you follow.
So that happens in Saudi Arabia?
That happens in Saudi Arabia. Remember that Saudi Arabia is one of the world's biggest buyers of US treasuries. US treasuries are bonds issued by the US government. A bond is a type of debt with interest. So all of these Muslim countries around the world, all of them, without any exception, will buy bonds for their reserve assets. All countries around the world will have these assets sitting there as reserves to tide them over in bad times, and they will all be interest-bearing bonds.
So they have a choice, but they still engage in that system.
Again, it comes back to what this brother was saying, that if you have the firepower, you have the ability to influence and dictate policy. So we need to be a little bit more brave than we have been. Today, we're in a position where we're weak as an ummah. So we feel that we have to obey our masters in other parts of the world, whether that's providing them with military bases. Oh, I'm going to get into so much trouble again. Providing them with military bases or financial access to our economies. The IMF is very good at that, by the way. And I'm going to give you one more example. When Egypt closed its borders at the Rafah border for Palestinians escaping from Gaza, you'll notice that they signed an agreement with the IMF at the same time for I think it was a $6 billion loan. And then they started building a camp in the desert, like a concentration camp. Literally, that's what it was, to concentrate people. My opinion is that an IMF loan, the International Monetary Fund and the World Bank, they don't make loans without geopolitical considerations. It's good for some countries in the world if these Palestinian refugees are contained on that side of the border. And we'll give you a little bit of a kicker on the side. Here's a loan from the IMF. I don't believe the IMF makes loans without conditions. And
who owns the IMF?
So it's called a multilateral. Yeah. So many countries in the world will contribute to it. Same with the World Bank. Same with any development bank, Asian Development Bank, African Development Bank. Islamic Development Bank is effectively owned by, or member states are the OIC, the Organization of Islamic Countries, or cooperative. So these multilaterals are effectively set up in a kind of trust where you have member countries. So everybody contributes to it.
So those those countries influence?
Yeah, and who has veto rights at the UN? I mean, those are the countries who influence these.
The point is that if Saudi Arabia is not operating its banking system in a Sharia-compliant way and is engaging with the international financial system in a non-Sharia compliant way, then there's not much hope for the million or so Muslims, 2 million Muslims who live in this country, 90% of who live in poverty. So they're not going to influence the way that banks operate.
Yeah. So we're an ummah of hope. We're optimistic people, and we should never despair. And if it's the day of judgment tomorrow, we should plant a tree today, right? So I believe there is hope. And I believe that even 1 million people or 4 million Muslims in this country can make a difference in the world. Remember, it was actually London that kick-started the sort of second wave of Islamic finance back in the early 2000s. So the London the young Muslim technical professionals migrated over to the Dubai International Financial Center and set up an entirely new industry from the DIFC. And that came from here. That was us. That was people like us. So I believe we're people of hope and that we can change our condition. Bi'idhnillah, we can change our condition. So I don't despair. I want to be careful that I don't say that the Saudi banking system or the UAE banking system or the Pakistani banking system is not compliant, is not Sharia compliant, because we're trying to make the best, as an ummah, we're trying to make the best of a bad job. We are, frankly, economic slaves. Let's not pretend otherwise. We need to recognize that in order to break out of it. And we should break out of it. Unfortunately, when some of our people try to break out of it, again, I'm going to say something political and I'm going to get in trouble for this. There's I believe, a very good man sitting in a jail in Pakistan at the moment who has been arrested for trying to do the right thing. And, every time we try and rise above that, we get cut down. It's that tall poppy syndrome. But we shouldn't despair. We should keep trying. That's our test in this time. In different times, people have different tests, but our test right now is we're economic slaves. We have the tools and the capability and the thinking to break out of it, but it comes down to, if we're going to finance the biggest supermarket in this country, well, let's dictate our terms. Before I come to you, there was a question here.
Just touching on that, actually.
I remember you.
So the use of others' acquisition of Asda, and you mentioned they went to, I think it was Barclays, and you said the path of least resistance. Would you say it was that, or could it be more so the Muslim premium we hear about? I know with mortgages, for example, people talk about Muslim premium being so too expensive.
Okay.
Could that have been?
So that's a good question, because I think that reveals a sort of conventional thinking in the market, which is there's a thinking that, if I go down the Islamic route, it's going to cost me more. So I'm not here to sell anything, by the way. And besides, what I sell, I only sell to professional investors. So unless you're a professional investor, I can't sell it to you. I created a product called a profit participating note, which finances companies. And the way I do it is in a true mudaraba fashion. So I've taken prophetic economics and I've translated it into a modern capital markets instrument, fully regulated and listed and so on. Now, the rest of the market doesn't do this. The reason why is because they don't go back to first principles. They don't say, how was this done? What's the origin story of Islamic finance? How was this done 1400 years ago? Can I translate that into a modern financial regulated instrument? Most people say no. Or I don't know what the origin story is, so I don't care. So I'm just going to follow what everybody else has done. So there's this idea in normative thinking that if I go down the Islamic route, it's too complex and risky and blah, 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 and I've got to share risk, and that means it's going to cost more. The way I've done it is, I tell my investors, I'm giving you an opportunity to share in the upside of a trade. What's the trade you're interested in? Is it agribusiness? Is it professional services? Is it commodities? What is it what interests you? Are you somebody who likes the world trade in steel or copper or Brazil nuts, right? If I can offer you that trade and allow you to share some of the upside, you'll be interested in that. They'll say, oh, sure. As long as you do it well, as long as you have got checks and balances and controls in place and you've got capital calls and you do a lot of due diligence and you examine the cash flows and you monitor them over the lifetime of this financing and I get regular reports. As long as I get comfortable that you're doing your due diligence, fine, I'd like to participate. Then on the other side, the clients, the businesses who are raising money say, well, I could go to a bank and I could pay a few percentage points on a loan, but do I want to do that? So the first client that came to me, they said, Look, I've got banks throwing money at me. Throwing money at me. I can finance this relatively cheaply, but I don't want to. By the way, it was a non-Muslim who said this. It was a non-Muslim. I don't want to because the banks take over my business. They restrict my balance sheet. I have to give them security and collateral and representation and warranties and blah, blah, blah. And now I don't have control of my business anymore. It's being run by, I'm being dictated to by the banks. So how do I have a form of financing that's flexible? They don't cut me off at some point. That grows with me. I'm willing to share my upside with those investors. So you see, this is a mindset change. This is not the client thinking, oh, well, Islamic is very expensive. He wasn't thinking Islamic, by the way, because he's a non-Muslim. He was thinking, what's the best way of sharing my risk with investors? He was thinking in a very Islamic way. Can you imagine? Right? So that's a mindset change. That's us thinking not which is cheaper, which is more expensive, but which is healthier for the relationship with my investors. They're no longer masters. This is not an asymmetric relationship. We're going to now share in the upside here, or downside, but that forces us to make better decisions. Because again, the banks don't need to do that due diligence. They just look at your balance sheet and they say, yeah, it looks like a good credit. They use this word credit. Credere means to believe. They have faith in something. I have faith that they'll repay me. That's all their interest, repay plus interest, not risk sharing. That's why. Well, there was a question back here. I'm just going to take that one and come to you.
You said earlier that the Muslim community does need to do more to support new lending initiatives. Let's take the mortgage on the mortgage broker, but easy example for me to use. The pushback I often get is expensive. And the first thing I'll say is I won't touch it. So go talk to your local imam first, not your mortgage broker, right? But the problem is that where Muslims have responsibility, accountability towards supporting that market, where the rates are significantly higher, especially sort of 10 years ago when a few of these new players came out, rates were sat at 1%.
Yeah.
These new bank status lenders, which not keen on, 5-6%.
Yeah.
So where the example you just gave in that situation, that's more sort of business related,
Yeah.
right? But in the very simple essence of a home loan,
Individuals who need to finance themselves.
they want to save money,
Yeah.
right? So if the new sort of lenders, new fintechs aren't able to drop down that cost of funding through whatever financial activity,
and they never will do unless we collectively,
people,
it's a bit chicken and egg, isn't it? Unless we collectively support these enterprises, that price is never going to come down. So we never make the first move. That's the problem. I think we're lacking a little bit in I will come back to you, but did you put your hand up just then? Oh, okay. So I'm going to answer one more question, and then we'll cut off for a short break. Yeah, sorry, go ahead.
Yeah, so for example, the Saudi Riyal, let's take for example.
Oh, I just realised I have to finish that comment. So sorry, I'm coming back to you. I have to finish that comment. It's a really hard one to answer because it does require a mindset change. And I'm going to come back to the concept of barakah. I've never seen barakah in a business that finances itself with riba. Never seen it. Coming back to your question earlier. I see barakah in businesses that remove riba, that take riba out from them. One of the things, again, I'm not selling anything. One of the model clients that I have coming to me is a business that says, I've got loans in my business, I don't want them. How can I take them out, refinance them with something purer? I am telling you, on every single occasion, that business does better in every way. Even if it's down to human relationships, family relationships, they start improving. You can't quantify this.
That's the hard thing.
That's the hard thing to convince people. Yeah.
It's a nightmare to deal with.
Do you want to sleep at night? Is the best way to respond to that. Do you want to sleep at night? Do you want to feel at peace with your Lord?
I don't either way, but still, yeah.
I will come back to you. I need to take a short break because of the camera, and I'm going to take your question and maybe come back to you after.
Yeah, so for example, the Saudi Riyal, it has, I believe, a conventional fixed peg of the US dollar. The US dollar, it's a fiat currency, of course. So how do scholars, I'm taking for example Saudi Riyal, but throughout the Gulf, they're mostly pegged to the US dollar. How do scholars reconcile that fact?
They don't. They don't.
Surely they could just say, keep how it was, back it with gold. Why fiat currency?
Okay, so this is a massive question, which will require a whole session, which is part 3 next week. Okay, we are going to talk about that. So please keep that one in your head, and let's come back to it next week. And I'll try and do a little answer after the break, and I'll come to you afterwards. Thanks. Okay, bismillah. So we're back again, second half. It's not really second half. We covered a lot of ground in the last one, actually. Let's just do a recap on Islamic banks. Remember I said last week that sometimes when I do an interview or a podcast or something, and then the podcaster will put as their clickbait headline, Islamic banks are haram. That isn't actually what I'm saying, so I just want to be clear about that. I'm saying that the business model on which Islamic banks are based needs fundamental correction. We're maybe not powerful enough currently in the position that we are to be able to make that change. And so we can take advantage of the doctrine of necessity, which is that we need financing institutions. And for the time being, we're following the model that the rest of the world follows, which is fractional reserve banking. So please don't think that I'm saying Islamic banks are haram. I'm just saying there's a flaw in the model that we need to try to correct. So let's just recap on that. Modern financial systems directly contradicts core principles of Islamic teachings. What I've done here is, I know you can't see this very well, but I wrote an essay on sound money and Islamic finance, and it's called Bitcoin, Fiat, and Islamic Finance. Fiat, remember, is money that's decreed to be so by a government. That QR code will take you to that article if you want to read it. Don't worry, I can put it back up on screen later if you're struggling to focus on it. But that really is my case as to why Islamic banking needs reform and how the Islamic finance industry needs to become closer to, and how it can become closer to, prophetic ideals. So as I say, that banking model is about creating money, lending at interest. Islamic banks are also about creating money and lending at interest. I've got the wrong information here. Yeah, they rely on debt creation. They use complex legal ruses to mimic interest-bearing loans. Their reliance on fiat money rewards asymmetric relationships. There's no risk. There's risk transference to the borrower. They encourage harmful short-term behavior because we have a borrow, spend, consume model. Borrow, spend, consume. We're incentivized. They are incentivized to keep interest rates low. That's why they do things like quantitative easing, which we're going to talk about next week, to try and keep interest rates down. That encourages us to keep buying things with borrowed money rather than saving up to buy those things with saved money. Whereas I believe Islamic finance should be rooted in trade, in free markets, in equitable risk-sharing partnerships, where we have what we call skin in the game. Skin in the game. Don't worry, I'm going to come back to your question. So I was at a conference last week. By the way, I don't do conferences. I actually hate being surrounded by bankers and so on who are just talking nonsense at me. And I'm just tired of doing those industry things. But there's one thing that I attend every year, which I find very valuable, and that is a closed circle, what they call Chatham House rules, which means that we're not allowed to discuss specifics and attribute them to a specific person who was there at that closed circle discussion. It's called the SOAS QFC Annual Islamic Finance Workshop, and it takes place at SOAS in London. They invite about 30 scholars, practitioners, lawyers, and bankers, and academics. And we sit around a table and we debate a particular theme. So this year the theme was programmable finance and tokenization in Islamic finance. Now, I ended up having a bit of a heated discussion with one of the participants there, who accused me of trying to be more pious than him. And I said, I don't see why I'm trying to be more pious than anybody. I don't consider myself to be a good Muslim. I'm practicing, but that doesn't make me a good Muslim. And all I'm saying is that this debt that you keep defending, and his case was that Sharia allows us to have debt arrangements and equity arrangements. It allows us to, we're allowed to have these murabaha and other structures that mean that we can pay a deferred payment for an asset, for example. That's halal. We're allowed to do that in certain circumstances. My point was that if you think debt is equivalent to equity, and is as good as equity, then why are we in such a mess today? Why is the global South enslaved by the global North? Why do we have poverty in this country? Why do we have inequality? Why does inflation cause inequality? Where does inflation come from? All of these questions can be answered by debt and riba. It all points back to debt and riba. And you're telling me that debt is equivalent to equity, and you're accusing me of being pious for making that case. It's absolute nonsense. Empirically, it's proven, it's obvious, it's self-evident. If you can't see that, I think it's a you problem, not a me problem. So that's why I talk about having skin in the game. I think when you have skin in the game, when you have these partnership arrangements, headline figure is, it may cost you more, headline figure. And you were talking to me earlier about having your business financed by an outside party on an equitable basis. But that's not the important bit. It's not the number. And I know, again, coming back to this brother who said, it's not fair. It doesn't sound right that individuals would have to pay more to finance their car or their house or whatever. And I appreciate on an individual level that can get difficult. I mean, we all budget to the month and we have to, match our income against our expenditure. And if we're paying X amount more because we went to an Islamic bank or an Islamic fintech, then that's not really fair either. So it's a dilemma. It's a hard one to solve. Before I come to you, I'm just going to check. Yeah, so the result today is that we have an industry that is not serving us. We've got Islamic banks that are run by people who don't have cultural affinity with us. They don't have existing deep networks within the Islamic finance industry. They come from the conventional industry and they try and sell us this product. If you had a butcher who claimed that he sold halal meat, and he's got EDL tattoos up and down his arm, and he's got a Rottweiler at the door, and big flags in front of his door, and he said he sold halal meat, you're not going to go there to buy your halal meat, obviously. I mean, okay, maybe it's an extreme analogy, but why would you buy an Islamic financial product from people who don't share your values? It doesn't make any sense to me. So no wonder they're not doing well. So skin in the game, lack of cultural affinity, not being true to their prophetic ideals. I don't believe because they create money, they are not fulfilling the true objectives of Maqasid al-Sharia, which is the objectives of Islamic law. Whereas I say, imagine if you had a type of money, not fiat money, but sound money, that was scarce and finite, that was not infinitely printable by the banks, that required work to create it, like digging it out of the ground, that was not created at the stroke of a key, that could not be created ex nihilo from nothing through the issuance of debt. It would be inherently anti-riba and anti-inflation, because inflation steals your wealth by debasing your savings. So I'm talking about scarcity of money, which fosters what we call low time preference. We save and invest for the future. We don't borrow, spend, consume today. That aligns with Islamic ideals of sabr, of patience, of nafs, of ego, of disciplining ourselves, of khilafah, vicegerency, where we're stewards of this planet. A sound money forces financial markets back towards authentic risk-sharing investments, skin in the game. So do I think Islamic banking can be truly ideal on a fiat monetary standard? No. But I do think that there are better alternatives that meet Maqasid al-Sharia. So I wrote this essay with a gentleman called Alan Farrington, who's an investor in Bitcoin venture capital. And we wrote this article called Bitcoin, Fiat and Islamic Finance. And that is my summary of where I think Islamic finance has gone wrong and where I think a solution might lie. And often when I say this word, sometimes I do these lectures and podcasts and so on. And I say something and I talk about Islamic finance and people say, oh, I get this, I understand this, I see where this guy's coming from. And then I mention Bitcoin and all hell breaks loose. And they think, oh my God, this guy is just talking nonsense. Bitcoin's obviously haram. And then they start equating crypto with Bitcoin, which I don't, by the way. They're two completely different things. Bitcoin, I believe to be a potentially real form of money. So I just want to emphasize that, and we are going to talk about that in some detail next week. Amna, you had a question.
It was just following on from your point about the lack of barakah, which maybe comes across from using conventional forms of finance. But when the alternative that you have is this Islamic finance model for an Islamic mortgage,
Yeah.
how can you justify going for an Islamic mortgage when essentially maybe you could say that it's similar to that of a
Yeah.
cash mortgage? That's what I find when
Yeah.
I'm talking to the older generation. They're like,
Yeah.
well,
Yeah.
you hold the nose from this way or that way, it's still the same thing.
Yeah.
So how do you respond to that?
Yeah. So in case the mic didn't pick it up, the question is, I was talking earlier about barakah and removing and taking away riba from your life increases the barakah in your life. And then the question is, but then if you go to Islamic banks, which themselves are creating money ex nihilo, then why does that mean there's extra barakah? Actually, I think there is a difference. I do. And I am harsh, but I think fair on this point. I know many sincere practicing Muslims who are working in Islamic banks. They are trying to do the right thing. And they were there originally when the original management team of Islamic Bank of Britain set up in 2005. MashaAllah, those guys were, they had pure hearts. They wanted to do the right thing. And they wanted to create products that we would actually use and it would help us to become economically prosperous. Things moved along the way. Management teams got changed. They don't look like us anymore. They don't think the way we think. They don't have that cultural affinity. I think there's still more barakah there because we still have people who are like us, who still believe, who are still trying to, Allah reward them. I hope they are rewarded for this because they're still trying to fight the good fight. And that's why I think it's actually important that to some degree we still do patronize those institutions. I know that sounds a little bit dichotomous. On the one hand, I'm saying I really don't like what the Islamic banks do. On the other hand, I'm saying, but we should use their services. And, some people say that's hypocritical. I don't know. I still have some products with them because I couldn't find the alternative elsewhere. So again, it comes back to the doctrine of necessity. Can you find it somewhere in a better form? Can you afford to use it in a better form? Which is a relevant question. We can't divorce ourselves from the idea of this is much more expensive, this is much cheaper. I remember one of the scholars telling me, you cannot have Islamic finance that claims to be pure, but it costs so much more. That's not halal. You can't gouge your customer. So, I want to try and be fair as well. I don't want to dissuade people from using Islamic banks. Sometimes there aren't any alternatives out there. But at least you will be working with some people who share your values. At least you'll be supporting them and they'll be supporting you. And mutually you can agree when you meet them in private and they say, I know this is not ideal, but it's the best that we have. We can all work towards other things at the same time. And I always say to people, get your skills in those organizations. And then once you've got enough of those skills, move and set up your own IFGs and WAHIDs and so on. But get your skills first, because I see a lot of initiatives from young people who want to change the world, and that's very commendable, and they want to create their own fintechs, but they don't have any skill set. They don't know how a financial product works. So it's important that we do spend the time in those institutions and work it out. Does that answer your question? Yeah.
Sorry, just a question. Have you touched upon, did you touch upon regulation, how we can influence regulation? I know it's a really huge subject.
Yeah,
how to make things easier for people. I'm at the retirement age basically, so for the youngsters in the room, going forward, would you be touching upon that?
Yeah, so the question is about regulation and whether I'm going to spend time talking about it. It's one of the most boring things to talk about. Yeah. So I'm sure you're aware that there's been lots of initiatives over the years to persuade the government to introduce halal student loans, for example. I mean, this stretches back to early 2000s when the governor of the Bank of England is neighbours with this Bengali family, and he realises they don't have access to financial services, and then that sets in train the whole development of the Islamic finance industry in the UK. For over 20 years, we've been talking to the government about student loans and how we can have an Islamic student loan company. And it just gets mangled all the time. Right now, there's another discussion which apparently is moving forward in which they're saying we now have a product, it's been approved. I've looked at the product, I don't like it very much. and it still hasn't been implemented. So there are people in the room with government talking to them. I'm not one of those people anymore. I get invited sometimes, but I don't turn up because getting an MBE is not my life's goal. So regulation, it's an important conversation to have. I'm not one of those good people with the patience to have that conversation with government because I have been let down by them so many times. It used to be the case that you would meet the new economic secretary to the Treasury, and 6 months later it would be a new person. So your conversations would be invalid. You'd have to start all over again every 6 months. At which point I said, you know, whatever it is, whether it's about Islamic banks or loans or student loans or whatever the discussion is, I'm out of this. I'm just going to create my own industry, and if people like it, they will come to it.
I'm sure people in the room know better myself. I'm not in the finance industry, but I look at, like, for example, the Exchequer saying that ISIS, for example, don't keep your money in a cash interest generally. I should put it into stocks and shares.
Yeah.
So there is a sort of change in mentality in terms of equity, in terms of keeping money away from interest.
Yeah.
Products, yeah. So I don't know whether now, you know, is there something happening? Is there a wave? Is there a mini wave or something where we can benefit from? Where the mind shift is happening that, you know, go away from these certain products to a different type of product? So hence, could we ever marry that up with what our needs are?
Yeah. Do you know, I think one of the most significant conversations to be had with government is trying to align tax legislation on equity against debt. And I was having a conversation with this brother in the break about the incentives that business owners have on leveraging up their business with lots of debt, right? There's an incentive to do that because it's a tax advantage for them. So that conversation does need to get louder with government to say you need to equalize the tax outcome, whether you finance a business with a risk-sharing form of finance or a debt form of finance. And if we get to that stage, that will be a huge game changer because it means that we can introduce a lot more. We're now incentivized financially to take on risk-sharing, profit-sharing, mudaraba-like arrangements to finance our businesses. That has been a wish of my community, my sector for a long time, but it only applies in places like the Gulf where you don't have tax, or in Dubai certainly you don't have tax. You have some forms of tax, but not income tax. So that's a conversation I think that needs to happen. Others are very much on the peripheral conversations, you know, student loans and so on. Does that answer your question to some degree?
Yes, thank you very much.
Okay, all right. Any more on that before I move on? No. Please.
I was going to say, so banks 50% Sharia compliance, say, that's better than zero, isn't it? So it's a movement in the right direction.
Yeah.
So the onus is on them to really up their game over time.
Yeah.
But we're having the confidence we have.
Yeah, they won't do it. The banks won't do it. That's why I don't go to industry conferences anymore. That's why I don't talk to bankers anymore. By the way, the product that I sell, again, I'm not selling anything, but the product I sell, I don't even go to the banks to discuss it with them. I stopped doing that. I go to family offices, I go to endowments, I go to asset managers. I do not go to banks. Because when I go there and I say, hey, I've created this financial instrument that your treasury department and your customers and your investors can invest in, but it's not debt, it's not equity, it's not shares, it's something else that you don't have a tick box for. And they say, I really like this, but I can't incentivize my salespeople to sell this product to anybody. It doesn't fit any nice little box here. So I've given up. I don't have time for the banks anymore because I could be dead tomorrow. So I need to run at 100 miles an hour today and make this happen. It's not going to happen through those people. The incentives are not there. They're not incentivized to make this happen. They make a lot of money doing what they do. And it's impossible to get a man to understand a thing when his salary depends on his not understanding it. That's why I don't bother. Right. I was going to spend a little bit of time on explaining simple financial instruments. To some degree, we have been talking about equity and debt, and I thought I might explain different types of instruments, and because people often ask me, I don't know, what financial instruments are out there. And I know that this will be very basic for some of you because you work in the financial services industry, or you might have a degree in economics or whatever it is. So this is not really intended for you. We've talked about equity, stocks and shares, owning a piece of the company. Often this is listed on an exchange, you can trade it. You can also trade something called a bond. A bond is a fractional piece of a loan. So when a company finances itself, or a government, it can either borrow money from a bank or a small group of banks, or it can borrow money from the whole market. So you could potentially have 1,000 buyers of your piece of a loan, and they are called bondholders, and they all own a piece of that loan, and they all earn a little interest rate on that loan. So that's a bond. A bond is a little fractional loan, often listed on a stock exchange. There is an Islamic analogy of a bond, and it's called Sukuk. And the word Sukuk comes from the word sak. Sak means actually the English word check is derived from the Arabic word sak. So Sukuk is a piece of a beneficial interest in a company or a person or a venture. So if I own Sukuk in a company, it's like I own a bond. It's the same format as a bond. But in theory, this is a Sharia-compliant version of a bond. About 20 years ago, more than 20 years ago, the team that I co-founded at Deutsche Bank essentially invented the modern market for Sukuk. So we created the very first large, what they call benchmark size, Sukuk issuances to finance governments and companies around the world. And the Sukuk became known as an Islamic bond. And in those early days, we tried to do the right thing. So we wanted to have, we were idealistic, we were young. The Islamic finance industry was starting to take off at that point. And we wanted to create these risk-sharing arrangements in a bond format. So we used structures like mudaraba and musharaka, this partnership arrangement in these sukuks. Unfortunately, over time, that concept became diluted, and the banks realized this was a big money spinner. So they can make a lot of money selling these bonds, these sukuk, to people. Let's try and make them as close as possible to bonds. So over time, they started to introduce new concepts into sukuk. One of those concepts, for example, was a contract called a purchase undertaking. Remember the contractum trinius, circumventing the church's ban on usury? So now with sukuk, you had this extra contract called a purchase undertaking, and that extra contract said, I, the borrower, agree to pay you, the lender, 100 cents on the dollar at maturity. I agree to pay you back at maturity. Now you would think that in Islamic financing, you wouldn't guarantee the return of capital back to the lender. You can't do that in Islam. But now you have this extra contract that says, I agree to pay you back for this asset. I'm going to repurchase this asset. A sukuk is supposed to be not a loan where you simply advance money to somebody and he gives you money back with interest. It's supposed to be, you give money to something, to a venture, and you say, I take possession or ownership or some beneficial interest in some trade activity or asset. And I'm going to earn some return from that trade activity. The performance of that activity comes back to me in the form of some profit distribution. So now I've taken real risk in something. This is good. This is a real economy activity. And then at the end, you repay whatever capital has been used up. So that's right, that's real economy. And so when the British government, for example, issued its own sukuk, it said, well, I've got some buildings in Whitehall. Let's drag and drop these buildings into a special shell company. And now the sukuk investors effectively own these 3 buildings in Whitehall. And we, the government, will pay you a rent. Every month, or every 6 months, you'll get your rental payment. This is fantastic. This is now a real economy transaction with a real asset sitting inside this transaction. That's exactly what Islamic finance is supposed to be. But what happened? You have a purchase undertaking that says, I, the British government, agree to repay you in full at the end of this financing. So you're not taking asset risk anymore. You're taking British government risk. That sponsor of this transaction is actually your credit. That's the entity in whom you have to have faith, credere, to believe. And the rate that we pay to investors, the sukuk holders, is exactly the same as the UK gilt rate. Gilts are bonds issued by the British government. So LIBOR plus whatever, X%. It's an interest rate dressed up in some Islamic way with some nice Islamic words. So that's why I am a critic of modern Sukuk. And again, why I created, again, not selling anything, that's why I created the PPN, the Profit Participating Note, because it's meant to be a Sukuk that actually takes performance risk on a trade activity or an underlying asset and returns profit from that underlying asset, not a guaranteed return. So that's bonds and Sukuk. Funds. You may invest in mutual funds with some ISA provider. They may be thematic, they may be world stocks, they may be renewable energy, they may be semiconductors, they may be something else. Then there is another form of funds called exchange traded funds, which is something that I use personally. So if the theme that interests you, let's say big tech companies, you can buy ETFs, exchange traded funds, which is like a single security traded on a stock exchange that you can just buy, and its price will fluctuate day to day, and it will encompass a whole basket of stocks. I think I mentioned this last time. So ETFs, I think, are a very important way to diversify your holdings. I'm going to come to you, just going to finish off at the end. The final one is derivatives, which is a controversial subject in Islamic finance, because there are such a thing as Islamic derivatives. What is a derivative? A derivative is a financial instrument that derives its value from something else. So you could argue that it's an intangible. So for example, if I said to you, I'm going to pay you £100 if the temperature is above 30 degrees centigrade tomorrow, that's a type of derivative contract. Of course it's gambling, of course it's haram, but that's a type of derivative. I'm not saying that all derivatives are gambling, by the way, but there is an element of derivative transactions that is very speculative. And it's important to distinguish between those types of derivatives that are set up to do things like, for example, hedge our macroeconomic position, my exposure to currency fluctuations, or my exposure to some other, let's say the oil price or something. So when you create a derivative to hedge your exposure to some business risk, there's an argument to say that's a halal use. Obviously, the nature of the instrument itself and how it's structured, it's important that that's done in a Sharia-compliant manner. But the concept of hedging yourself against macroeconomic risks is actually perfectly halal. Some people say insurance is haram. I'm not sure why they say this, and I'm not sure where they get this from in fiqh. Because if you speak to ulama, qualified ulama on this subject, they will say the concept of mutual cooperation is very Islamic. If you got a group of people together in a community and said, if we pass away, who will look after my children? It would be perfectly acceptable for you to all say, let's pool our resources so that if I pass away, my children are going to be looked after. That's not haram. That's a very good thing. You want your children to be looked after. So the concept of mutual cooperation as insurance is perfectly halal. How you execute that is something else. You had a question.
Yeah, I have two questions. So first of all, what's the difference between a mutual fund and ETF? And also, you didn't use these two words, but I know derivatives mostly made up of options and swaps. What's the difference between those two as well?
Okay. So that's a very technical question on options and swaps, and I'm just going to be very brief on that. An option is a right to buy something, or sometimes it's a right to sell something. And a swap is when you have a particular cash flow and I have a particular cash flow, and we agree to swap our cash flows. So here's an example. You're a company that manufactures and its income, its expenditure is in euros, but your income is in dollars, and so you have a currency risk, because if the mutual value of dollars and euros fluctuates too much, you might be exposed to a lot of risk. So you might want to hedge your position and say, how do I ensure that I am able to fix my currency rates? And your cash flow might be the opposite of somebody else's cash flow. So their income might be in dollars, but their expenditure might be in something else. So you might want to swap your cash flows. So there are contracts in the financial markets that allow us to swap different macroeconomic variables. So those are two different, it's a very technical thing. There's two different types of financial instrument. Your first question was about mutual funds versus exchange traded funds. So if you, there are companies in the world called fund managers or asset managers. My brother is a fund manager, and my kids always used to think his job was fund manager. So how do you have a job where you create fun for people? But his job is to create funds for people, and those funds are collection of usually stocks, could be something else, could be bonds, but a collection of shares in one vehicle that you buy a piece of, a unit in, and that's called a mutual fund. It has to be regulated. You know, these things are always done under the aegis of a financial conduct authority or something equivalent. An exchange traded fund is a type of fund, mutual fund, that you trade on a stock exchange as a single security. So you can buy and sell it on a daily basis. If I go to a mutual fund manager, an asset manager, and say, I want to buy into one of your funds, it's probably not as liquid as buying an ETF on an exchange, because you have to go to that fund manager and maybe they'll trade it once a day, and maybe, you know, there'll be lots of documentation, and it might be a private collection of investors. It might not be a public group of investors. With an ETF, you can be a member of the public. You can go to your broker, or you can go direct to the exchange and just buy it like you'd buy a share. So that's the difference.
Yeah. So are swaps haram?
The concept is not haram,
Yeah.
because the concept is I might be hedging my exposure to some risk in the world, price of oil, for example. And that comes back to this idea of mutual cooperation, right? Around the world, we are all participants in a global economy. And sometimes we don't want our families to be left in the lurch if we pass away, so we find ways to mitigate that. So that concept is halal. And if you're a business, you don't want your business to fail because some rate moved against you, right? That wouldn't be good for your shareholders, that wouldn't be good for your livelihood, that wouldn't be good for your employees. So you want to find ways to enter into derivative contracts with counterparties that hedge your macroeconomic risks. So the question, are swaps haram? Not inherently, but in practice, many swaps that you see produced by financial institutions and often on exchanges are structured in such a way that either the underlying trade is itself not compliant with Sharia, or the contracts used to create that financial instrument are not Sharia compliant. So it would be rare in the financial markets to find a swap which actually was Sharia compliant. Derivatives is a very complex area. I'm actually, in some senses, I was thinking maybe I don't even include that last bullet point, because it's just going down a rabbit hole and we could spend weeks talking about it. No more questions on this slide, then I will move on. Okay, so how do I invest in a halal way? If any of you look at my LinkedIn profile, you might see a few blogs on there. This is something that I blogged about. It's an article I wrote. I think I called it "How to Invest My Savings in a Halal Way." And this is one of the questions I get asked most frequently. As a community, we're not very financially literate. You know, and I think that's one of the reasons why we get scammed a lot. There's a lot of crypto bros out there and a lot of finance bros out there who are selling a service, and they're telling us that you too can create £50,000 a month in earnings the way I did by trading binary options. I don't even know what binary options means, by the way. It's a word I've heard them use. I've been in this industry for 32 years and I never heard that word before. They talk about contracts with differences and all sorts of fancy jargon. It all looks really impressive and they look slick. And they stand in front of a Bentley and wave their Rolex watch around. And it's just really weird to me why this happens. But we get scammed by it a lot. And that's because we're not financially literate. And it's not hard, by the way, to be financially literate. Most of what financial people do is a sort of gatekeeping. They use jargon so that you don't understand. You know, they're the priests speaking Latin in the Middle Ages. The priests spoke in Latin because they didn't want the lay people to understand the word of God. We don't need a priest between us and God. We can speak to God directly. We do it 5 times a day. But when you force people to learn Latin to speak to God, then you've created this barrier between you. And that's what financial people do. They use jargon so you don't understand how simple it really is. And most of finance is common sense. Most of finance is about simple risk control. if it sounds too good to be true, it probably is too good to be true. So when I talk to how do I invest in a halal way, the first thing I say is get financially literate. It's not hard. I remember I was moving jobs when I was a young graduate trainee, and I was entering from a consulting industry into the investment banking industry. I didn't know how to make that move because I wanted to work in project finance, which was the financing of infrastructure, roads, railways, hospitals, schools, and so on. And I didn't really know much about finance, but it was very interesting to me. So I went away and I started reading. And we didn't have the internet in those days, so I didn't have the resources available to me. But the first book I bought was a very simple red-covered book called How to Read the Financial Pages. That's it. How to Read the Financial Pages. And it was dead simple. Question?
I do.
Yeah.
Can you point us in the direction of, is there a roadmap or a framework of how to become financially literate? You know, is there like not a curriculum, but you know what I mean?
Yeah. Yeah, so and on my blog on LinkedIn, I also have I have some FAQs, which give a lot of resources on what to read, maybe the types of podcasts that you should be watching, and not the crypto bros on TikTok. The sort of resources that we have access to now. Some people want to do it in a formal academic way, so there are some academic courses as well, offered by, for example, the CISI. So these are routes that we can take. I think this can be done without resorting to formal academic study. I think this can be done in one's own time by reading the right literature and following the right people. I always say start with geopolitics. Start with a wider understanding of business and current affairs. And actually, if you remember, when I put the course pack together, I said, I don't expect you to come here with an understanding of finance, but I would like you to be interested in current affairs and business and geopolitics and the broader economy. Right? That's a helpful thing, because when you're curious about such things, then your financial education just follows on from that. Yeah.
I tend to read the FT just on Sunday.
Yeah.
Because I don't have the patience or
Yeah,
the time.
me too, by the way.
Right?
Yeah.
It's plagued with un-Islamic stuff.
Yeah.
Is there still value in having that habit?
Yes, there is. Yeah. Know your enemy. That's why. I can only do what I do because I've been an insider for so long. And you can't really, you have to know how it works in order to change it. So when somebody sets up a new fintech company and says, I'm going to change the world with this new neo-bank, digital challenger bank, Islamic. And I say, have you ever built one of those before? Have you ever built a financial institution before? Have you ever created financial product before? Have you sold financial product to real people? Can you make it commercially viable? And they say, no, but I've got a marketing degree. Not to denigrate marketing degree, perfectly valid. But that's not the skill set you need. You need to know how this works, right? So, by the way, FT, I think, is a very valuable resource to read. And if you know how to read it, because it can get complex. So that book helped me to read the FT, by the way, How to Read the Financial Pages. It actually helped me to understand it. Yeah. Sorry, there was something else.
No, I mean, my motive was to read it on the Sunday was to just kind of try and identify or establish things to invest in. But now that kind of it's turned on, it's upside down.
Yeah.
Because what am I investing in halal ways?
Yeah.
So I mean, I've frozen investing. For
So my starting point for understanding the wider financial services industry is to look at general business writers like Michael Lewis, Gillian Tett, who, by the way, writes for the Financial Times. David Graeber is one of the best books. I really recommend a book by an anthropologist called Debt, the First 5,000 Years. By the way, a list of these books is contained on my blog on LinkedIn. But Debt, the First 5,000 Years is the view of an anthropologist on how money originated. It's really fascinating. And I really wish that he had spent some time talking about Islamic finance in there. I've got a feeling he might have written a sentence on it somewhere, as in some reference to Islamic financial services several hundred years ago, I don't know. But it's a fascinating book because it actually starts with a scenario where he's at some soiree or some cocktail party and he's meeting somebody from the World Bank. And he has a view that I've espoused just now, which is that the World Bank is not here to make the developing world better. It actually makes it worse. Pakistan have gone to the IMF 24 times and they got poorer 24 times. And yet the IMF tells them it's going to do something good for you and make you better. But it keeps failing them, and we keep going back to them. And we go back to them because we're forced to. Sorry, I'm going off on a tangent now. But so these books I find very valuable because they introduce us to the wider geopolitical and macroeconomic issues. Confessions of an Economic Hitman. Have you heard of that one? Oh, it's such a great book. It's an ex-CIA asset talking about his time in Latin America. And it's eye-opening what's happened in places like Venezuela, for example. What's happening in Venezuela right now it's all interlinked. You know, these things don't happen because we need to bring freedom to the world. This is not at all the reason. It's to bring less freedom to the world. It's so that you're under the enslavement of one economy in the world. And the two greatest trades ever invented by humanity are as follows. Number one, the persuasion by the United States to sell goods and services to the developing world by effectively forcing them to build infrastructure financed by US loans in US dollars. So that country earns in a soft currency, whatever currency, the Indonesian currency or the Nigerian currency or whatever it is, and it has to repay in a hard currency like the US dollar. They will never be able to repay those loans, so they're always going to be enslaved. That's the first trade. So the US has now established its superiority over many other countries as a result of this trade that takes place. The second trade, which is probably an even greater trade in all of humanity, is being able to extract the mineral resources, oil, from Saudi and other countries, and being paid for that oil only in US dollars, only in US dollars. Hence why we call it petrodollars. But not even paying in dollars, but borrowing the money for that oil in the form of US treasuries. So the US simply issues new bonds, effectively borrowing from Saudi Arabia to buy its own oils. And it will never repay that trade because it keeps inflating the currency and printing more dollars so that it debases the currency, so the loan effectively vanishes over time. It decreases in value. Yes, please.
Do you know, in this trade agreement, does SWIFT come into play somewhere?
Yes.
And how does that work?
Yeah.
And it's another follow-up question. How is BRICS different to that, or is it?
Yeah. So SWIFT is a payment rail.
Okay.
It's how trade gets done around the world. And majority of trade is transacted in US dollars. So it's again, a very powerful currency. If you're not trading in US dollars, you're at a disadvantage. If you control the payment rails, entities that you don't like Russia, like Iran, for example, are excluded from those payment rails. So it's much easier to sanction against them. So it's a way of establishing your hegemony over another country, your superiority. And some countries are now pushing back against this. So you've heard of the BRICS entities, which are a certain few countries around the world who are creating a bloc amongst themselves to say, well, how do we have our own payment rails amongst each other? Do we need to think about having some other form of currency to transact with each other? Would that currency be a basket of other currencies, to establish some stability, for example? So these conversations are starting to take place now. But they all tie in with a much wider discussion on what is money, what is sound money. How do we ensure that we are not under the control of a foreign entity? The most classic example of that is Palestine, because there's no such thing as a Palestinian currency. All trade is done in shekels. And who controls shekels? The Israeli Central Bank. So you could be a poor worker who's forced to go through checkpoints from one side to the other, trying to earn in this paltry local rate set in Palestine and paying for services which are denominated in shekels. It's a horrendous form of economic slavery. So controlling our own currency is an essential part of finding some strength in our ummah. And again, we've devolved our thinking to somebody else. And our scholars are saying, listen to your rulers. Of course, this is an Islamic concept, to listen to your ruler. But if your ruler is saying, be a slave, I'm a bit uncomfortable with that. Right? I'm saying we don't have to be slaves. We actually have the capability and the strength as an ummah to change this. And that's something I want to talk about in detail next week, because I want to talk about sound money. We once had an Islamic dinar. For 700 years, we were the height of civilization under a gold standard, this coin called the dinar. There's a reason. There's a reason why we were the most advanced civilization in the world. We created low time preference for ourselves. Our form of money created low time preference. The form of money today is the borrow, spend, consume model that has high time preference. We want everything right now. Our companies need quarterly reports. Our shareholders need to be satisfied today. We need to grow. We talk about growth, infinite growth in a finite world. It's not even possible. It's physically impossible. But we keep talking about growth all the time. It's not possible. Going back to a gold standard, or something similar to a gold standard, again, I'm going to say the word Bitcoin and people are going to freak out, right? Going back to something that's sound money, that's finite and scarce and decentralized and not manipulated by one country. That's really important. We need to find that, because it will actually make us stronger. Yeah, I haven't even really started this topic, to be honest. And oh my goodness, we're already at 12 o'clock. I hope everybody's okay on time. I'll try and cover this very quickly. Most people I know do one of three things. They either let their pension provider decide how to invest their money, which obviously is going to be mostly non-halal stuff. Or they invest in real estate because they see it as a real tangible thing and their parents told them that property is safe as houses. Or they put their money in a savings deposit at an Islamic bank. And you know my views on Islamic banks. Now you have new fintechs who are offering alternative products. And these fintechs are providing alternatives like risk-sharing home financing, like risk-sharing Sukuk, other forms of halal funds, and so on. I always tell people that trying to time the market is a dangerous thing. Don't try and catch a falling knife. So don't try and find the cheapest point in the market and plow all your money into shares on the stock exchange. What they call dollar cost averaging is what I advocate for. Dollar cost averaging is every month from your salary, you take a little piece. Doesn't even have to be very much. Could be £10, could be £100. You put it into your fund, whatever that fund is. Maybe it's stocks and shares. Maybe it's your pension fund. But if you dollar cost average over time, in 30 years' time, you'll look at it when you're getting close to retirement and say, oh my goodness, how did that happen? I don't even know where that came from, because the power of compounding over the years. So I think, again, our community is susceptible to being scammed by get-rich-quick merchants. We want to find some solution that will magically give us a lot of money in a short space of time. But that isn't a sensible way to do things. And if we educate ourselves, become financially literate, and spend time, and then dollar cost average every month from our salaries, in 30 years' time, we'll reap the benefits of that. I want to talk about inflation hedges next week. Not crypto. I want to talk about Bitcoin, gold standard, and silver. Other forms of investment, Sukuk. I have talked about Sukuk earlier and how I wasn't comfortable with the Sharia compliance of them because of this purchase undertaking where you guarantee a repurchase. The Sukuk, like a bond, is a fixed income instrument. You buy a Sukuk and it pays you a coupon, a little payment every quarter or semi-annual period. I tend to find that Sukuk, like bonds, have got a very low payment, typically 5% per annum, for what I think is a relatively high risk. So I'm quite uncomfortable with the risk profile of Sukuk. And I think that there are better alternatives. I talk about them in my blogs. Just take a look at those. That's it. I want to leave it there. Let's see if there's anything else. Oh, investing in property. That's actually quite a big topic. I'm going to leave what makes a financial instrument Sharia compliant because we covered a lot of that. But let's talk briefly about property. Muslims like property. We can see, touch and feel it. It's tangible. It not only is a potential you can make a capital gain on it, its price rises over time, generally speaking, in an expanding economy. But also you can earn income from it, you can rent it out. So it's yielding, and it's also has capital gains. And people think it's safe. But people also leverage, they also borrow money to buy these assets, and I also advocate against that. I'm very uncomfortable with the level to which we as a community leverage our assets. In other words, we borrow money in order to buy these assets, because if the prices fall, and there's a chance that the market might fall, in the near future, we don't know. The economy is looking a little bit unstable. There's a lot of turmoil in it. And if the price of houses fall, if you borrowed money, you potentially can lose the whole house to the banks. Should I invest in property through a fund manager? I am not personally an advocate of buying exposure to the property market through a fund manager, because I like to keep it simple. And keeping it simple means educating ourselves financially, becoming financially literate. So I prefer that we learn how to invest in property directly without using a middleman. However, because property is an expensive asset, we can't all do that. So we have to buy a little fractional piece from a fund. Again, I would ask you please to be wary of a recent spate of Islamic fintechs that purport to be experts in property. You really have to ask yourself the question, are these people actually experts in property management? Have they done this before? How many years have they been doing this for? What is their track record? Did a deal ever fail? Did it default? Are there any defaults under the hood? I've seen under the hood of some of these companies, and I can see defaults taking place. So please be wary and do your due diligence on these new companies. Can a fund be Sharia compliant? Well, you have Sharia compliant funds out there. They pick stocks that meet the AOFI standards. Do you remember the standards I mentioned to you last week? These financial filters, how much leverage, how much haram income, etc., etc. So there are funds out there that meet these filters. But interestingly, there's only one fund I've seen so far, and that's from Wahid, by the way, that has filtered out so-called bad actors who don't meet the standards of some human rights organizations. So Palantir is the perfect example of that. And there aren't many of those funds around. So when you hear the word Sharia compliant, that doesn't necessarily mean that they have filtered out these non-financial filters. What does this company do in the world? Does it send military intelligence to a murderous army in the Middle East? What if the assets in your fund are leveraged? I often note that some fund managers who claim that they're giving you a property fund, for example, that's Sharia compliant because the properties in that fund are doing Sharia compliant business. They're leased to businesses that don't sell alcohol or whatever. That's great, but how was it leveraged? Presumably on the basis of a non-interest bearing debt. But if it was a non-interest bearing debt and they bought these assets using Islamic debt, was that Islamic debt commodity murabaha? Remember this contractum trinius equivalent? I don't invest in those funds because I don't like this commodity murabaha. I see it as a deception. Right, I think we're probably overrun by quite a long way here, so I'm going to, taking a loan halal or haram, I'm going to leave you with a hadith here. People ask me, is it okay to finance my business on a non-compliant basis? Again, alternatives are started to coming up soon. We're starting to see these new Islamic fintechs offering small business loans. Again, I want you please to avoid the replication of bank-like financing through structures that replicate a loan with interest. Again, this is why I created what I created, which is very much a risk-sharing arrangement where businesses are taking on a financing that is truly profit and loss sharing. And this hadith there's actually many, many similar hadith. Prophet ﷺ said, Allah has cursed the one who consumes usury, its client, and the one who gives riba, the one who takes riba, its witness and its recorder. Now that doesn't mean that if you're an accountant, you're automatically doing something haram. It's a specific reference to those people who would sit and record the transaction of riba taking place. Usury and adultery do not become widespread among people, but that they will become vulnerable to the punishment of Allah Almighty. There's many hadith, there's many references on riba. So I always say, it's a very simple question, taking a loan halal or haram. It's very simple. Riba is riba. Trade is trade. That's it for now. Next week we are going to talk about sound money. Let me give you a quick rundown of that. It's called Fixing a Broken Economy. And we're going to talk about what is money, a brief history of debt. Remember, I mentioned David Graeber, the anthropologist, the first 5,000 years, the social effect of high time preference, why GDP, gross domestic product, is a poor measure of human progress and leads to a death economy, the magic money tree, why governments print money, what does a hadith mean about gold and silver being hand to hand. We're going to talk about financialization. What is this concept, financialization? What is sound money? Why is sound money an Islamic concept? I'm going to talk about gold versus the US dollar versus Bitcoin. We're going to compare them as forms of sound money. We're going to talk about cryptocurrency. We're going to ask the question, is Bitcoin Sharia compliant? And why is there a difference of opinion amongst the scholars? So inshallah, see you next week at Sunday at 10 a.m.